General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. So it's the midweek review. Anchor point. So like Wednesday's the anchor point on NASDAQ, whereas Tuesday is the anchor point on SPX. So that's like S&T here at the highs. And we flip new week up in the gap, so I'm thinking lower here. This looks like a seek and destroy week loading. I think Wednesday high hold, and we target Tuesday low on Thursday, and revert to EQ on Friday. So that's a boring week. We just come sweep this and come back here. Just weekly buys tinted. I'm thinking we'll have a bearish doji by the end of this week. We basically back at weekly open, so only 2 days to create the body of the weekly candle. Shift and framework hit rate. There wasn't that many opportunities this week. PPI finishes up the high impact volatility. No case studies. Timing bias. This is week 2. So week 1 we had a large expansion. It looks like week 2 we exhausted. Expansion mitigation. Yeah, week 2 no liquidity pools has been taken. So kind of in the consolidation profile. Even this dealing range that we're in, we haven't took the higher or low. Decision quality, high probability, because we've been waiting for some one shot, one kill type of event to give us weekly direction. Solid weekly anchor. Narrative framework. The market took CPI in an odd fashion. So everything came on target suspiciously. The 2-year and the 10-year didn't really do anything. So the market took CPI as dovish, but we didn't get the reaction. Experience success / failure. Success is showing up, making sacrifices even when the opportunity doesn't present itself. Case study, no case studies. Let's go back. So it's Wednesday. So yeah, framework phase, manipulation, daily stance, engage, confidence level medium, reason, condition confirmed, week and day, Anchor point confirmed. Wednesday is expansion play now. No. Terminus hit the day. No. Nasdaq on the daily. It's interesting we did get an update, so it's not a news failure. It would be a news failure on SPY though, because it produced a down day. Nothing day, but still up close. We've just really been in this range. This high and this low has been holding everything. In the H1, the rejection at Monday high was respected, but price closed back through the new week opening gap on target Tuesday's low. On the 15 minute, you see how we open here, and we basically been in this opening range gap all day long. So we really could use Thursday and Friday to rebalance this with buy side and sell side. Okay, SPX. And we got an update right here too, so it's not a news failure. Interesting, price being held. Take a look at the H1. See how we got Tuesday's the high on this one, not Wednesday. And we went right back under the new week opening gap, so that's our mile marker. We got both of them bearish now. So Tuesday high held over here, so we got S&T occurring at the highs. This thing could still break down lower to those equal lows. Also, the new week opening gap has been flipped. We're going to M15. In this opening range gap, just like on NASDAQ, we flipped this inversion, reflipped it. It's crazy, seek and destroy vibes now. What I say we almost feel open range gap. I think we feel the rebalancing sweep previous week's low. Well, not previous week's low. It'll be the equal lows. The stock chart, the SPY. It's tacky, but we're still in this range from this high to this low. Nvidia, however, kind of broke out of its still range, or we wicked the high. It's still like 232 run up to earnings. Maybe PPI will give us a dip, but I really doubt it. I doubt we get back up in here. This would be good to buy though. Tuesday low of the week seems to be playing out. I think higher for Nvidia. It's not letting nothing else hold it back. PPI could bring a dip though. And on gold, I didn't get the buy down here I wanted, but now we created or engineered liquidity right above this level, so it's even more interesting to me. This looks like accumulation failure swing. So OLR here, or opposing liquidity run here, then higher. Price ain't made it to my buy zone and did engineer lows. It'd be interesting to buy. Did the framework play out? Nope, we had a seek and destroy profile. What y'all learn about pattern? We're getting better at recognizing when to push. Today wasn't a day. Chop fest. What we watch for tomorrow? PPI. Alright, that's that on that. Y'all have a good day. Peace.